Good afternoon, everyone. Welcome to another edition of Talking Business. Lots of things have been happening in the market overall, especially with the confirmation that the Fed gave some leadership in how they're addressing the inflation. But before we go to that, there's a bit of news that I think some of you may be interested in knowing about. Let's see if I can bring that up and we can have that conversation. So if I want to add a link to the system, how do I go about doing that? HR, are you still there? Okay, let's see. Add a share screen. Okay, so can everyone see the screen? Perfect. Okay, Mr. Rittenhouse, Kyle Rittenhouse. Big decision went against Mr. Rittenhouse in federal court that's repeated by me and being brought to you by AP News. Basically, they were trying to block a lawsuit from going through. And this lawsuit is actually from the father of one of the gentlemen that he had shot, Mr. John Huber. And Mr. Huber is bringing a lawsuit basically for wrongful death or some type of that his human rights was violated. And what he's looking to do truly is to just protect his son. And he wants to, the case actually, what the federal judge was able to do was to have the lawsuit proceed. And the proceeding of that lawsuit is going to really make an accountability for three specific people or individual groups that are part of that whole case. Government officials, they're being sued or they will be part of the lawsuit. Obviously, Mr. Rittenhouse will be part of it as well. And also the police officers who took part or who may have, I should say, allowed Mr. Rittenhouse to participate in the way in which he did, armed, because he was a minor in that state. So that's something where they believe that they may have a case. So with that proceedings, what they're looking for at this point is to be able to file the lawsuit for damages through both to sue both Kyle Rittenhouse, the police officers that were involved, or who had talked to him and allowed him to proceed, and obviously any government official that may have had some type of an influence in how situations went down that night. Obviously, we remember that was part of the George Floyd protest that was ongoing. And the gentleman that got shot was a Mr. Anthony Huber. So this is a big loss for the Rittenhouse team because at this point now they stand liable. Well, they potentially are now exposed to liabilities concerning this lawsuit or concerning this crime. In addition, what I'd like to do is just kind of recap with regard to the Fed closing statements and meeting from yesterday as how the market actually dealt with the raising of rates and how it proceeded. Let me just bring up the screen. Let me mute this. So unmute. Let's see. Bear with me a second. Let me see why the sound is muted.
Raised our policy interest rate by 25 basis points.
Let me know if you guys can hear the commentary in the chat. Let me. Okay. So I'll go ahead and play the commentary so you can hear what the Fed has to say.
We continue to anticipate that ongoing increases will be appropriate in order to attain a stance of monetary policy that is sufficiently restrictive to return inflation to 2% over time. The U.S. economy slowed significantly last year, with real GDP rising at a below-trend pace of 1%. Recent indicators point to modest growth of spending and production this quarter. Consumer spending appears to be expanding at a subdued pace, in part reflecting tighter financial conditions over the past year. Activity in the housing sector continues to weaken, largely reflecting higher mortgage rates. Higher interest rates and slower output growth also appear to be weighing on business fixed investment. Despite the slowdown in growth, the labor market remains extremely tight, with the unemployment rate at a 50-year low, job vacancies still very high, and wage growth elevated. We are seeing the effects of our policy actions on demand in the most interest-sensitive sectors of the economy, particularly housing. It will take time, however, for the full effects of monetary restraint to be realized, especially on inflation. In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 25 basis points today, continuing the step down from last year's rapid pace of increases. We have no incentive and no desire to over-tighten, but if we feel like we've gone too far, we can certainly and inflation is coming down faster than we expect, then we have tools that would work on that. So I do think that in this situation where we have still the highest inflation in 40 years, the job is not fully done.
Okay, so basically what the chairman is stating overall is that inflation is still...
When their babies are born, pray to God.
Let me remove this from the stream. Okay, as I was saying, what the Fed is actually doing is very good. They're basically trying to continue to slow inflation, but not to make credit such a big deal, because obviously banks need lower interest rates so they're able to either write loans for personal loans, car loans, and things of that nature, investments and or commercial investment, that is, and particularly as it pertains to the housing market. A high interest rate will affect the housing market, and he did mention something lightly about the housing market somewhat cooling. Okay, but he only raised 25 basis points. We know they've been strong from November, December last year when they were raising at 75 basis points at a clip. So this was a really big drop. It was expected that they were going to lower the interest rate from what was previous. So that was good, and that looks like it's going to be good for the economy as well, because as he stated, that retailers are still doing well because consumers are buying. On the other hand, the ECB, the European Union, they've taken a much stronger stance with regard to how they're going to look to taper off inflation from really becoming a domestic issue. They've raised interest rate 50 basis points today, and they have already gave guidance that they will do the same thing come March when they meet again. Our Fed, definitely, they're talking about watching the market closely, and hopefully inflation won't drop fast so they can bring it to a soft landing. That's always the key with most of these economists in terms of how they move and how they will move overall to control the market, or at least to not have the market spin out of control, put it that way, or the economy, which will automatically trigger the market. some big news is coming out with regard to crypto, and I thought I would feature some things on crypto because I know there's a lot of people in this space who who own crypto or maybe looking to get back into the crypto market now that BTC has at least showed signs that it's rebounding, which is excellent. I think we came around 16 something, I believe, was the low. And now it's already back to 22 and change. May have even cracked 23 or 24 today. I didn't check it before I came online. In any event, Coinbase, what is it? CoinShares CFO. He's got a positive outlook as it pertains to cryptocurrencies, but his concerns is that the U.S. regulators are not really moving forward aggressively to standardize cryptocurrency in terms of how it's going to roll out in the U.S. economy with commercial banks and so forth. Whereas Europe, they're moving a lot faster ahead with regard to cryptocurrency being rolled out into the society. Jean-Pierre Monetti wants clarity on which agency should take control or lead the crypto market, the crypto regulations. And those two agencies are basically the SEC, the Securities and Exchange Commission, and the CFTC, which is, excuse me, the Commodities Futures Trading Commission. Obviously, if the SEC takes control, there's going to be a lot of guidelines coming through them. But I think if the commodities market takes control, I mean, the futures market runs very well. So I think overall, if the CFTC would be the managing or regulatory agency over crypto, I think that would do extremely well for us or for those who are looking to invest in the market. So Mr. Jean Monnet says basically, CoinShares CEO or co-founder and CEO Jean-Marie Mognetti said lack of political will is holding back the development of a sound regulatory framework for digital assets in the United States. Commenting on the contrasting regulatory styles in the US and Europe, Mognetti said a top-down approach from the European political leadership makes a difference. And this is what he's talking about, because the United States is kind of like letting the companies do their own thing, more or less. And they're not taking any leadership in drafting guidelines for those who have security consciousness or capital consciousness to be able to preserve their capital. And we don't have what happened to, was that FTX a couple of months back? We don't have another situation like that occurring. Citing France as an example, CoinShares CEO pointed out that French President Emmanuel Macron pushed forward a lawsuit in 2017, which later culminated in forming a basis of the country's regulatory approach to the digital assets. I think we all know that digital assets will be a very big part of payment systems. Definitely, the U.S. will participate. I'm not sure why they haven't drafted regulations yet. I've seen various CBDs formats for different countries who are rolling out cryptocurrencies within their countries and the regulations to govern them. It's my impression that the U.S. will launch some type of federal cryptocurrency sometime this year, possibly before June. We can hear that announcement. But I think what Mr. Jean Monetti is saying is that he really would like to see some leadership coming from the U.S. regarding this. So it says, CoinShares CEO wants clarity. Mognetti said, we saw the beginnings of a top-down approach in the U.S. in 2022. However, the matter is hampered by ongoing uncertainty over whether the SEC or the CFTC will take charge overseeing this crypto space. in the U.S., we saw last year the presidential office making decisions and pushing the narrative in that direction. If legislation starts moving forward, toward that, then I think the agencies will be able to figure out who is in charge and who is not in charge. And that's somewhat like, more or less the way the stock market is going as well, where there's a lot of volatility, and from day to day, you really don't know which way the market's going to go, even though there's a lot of pressure, but their investors are still buying. One big story that I'd like to bring out also with regard to cryptos. One second. Let me stop sharing. Reshare. Now, Crypto Slate wrote an article yesterday that caught my eye, which I thought was extremely interesting. It said, Render token up 17% after the DAO approves burn and mint mechanism, which is their technology. RNDR, the symbol for Render, has experienced a sustained uptrend, recording over 82% increase in the last week and a whopping 302% over the past 30 days. So tracking the statistics and tracking if you're looking at a technical play, the movement is very positive. Render Network announced that it has received governance approval to implement the burn and mint equilibrium, the BEB mechanisms for its native token RNDR. We talked about the 17% uptick in the market or percentage gain. The token is trading right now. And one of the reasons why I'm recommending this, I shouldn't say recommending, but highlighting, is simply because when you're buying, whether you're buying investment equities or you're buying crypto coins, you want to be able to take advantage of the underlying securities, or in this case, crypto, that is trading much less or lesser than the top line cryptocurrencies such as BTC, ETH, and even, what's the next big one? Well, ETH and Bitcoin right now are the two biggest. I think Iridium, they're coming up, but their shares are still, I believe, under $5. That would be something to look at as well. Overall, the market right now, in terms of crypto coins, is a little over $1 trillion. It's 1.09 trillion. And the overnight or last 24 hours volume came in around 66.1 or 0.18. That's a significant amount of volume. Okay, let's see here. Render's BME mechanism leading the uptrend is a decentralized GPU provider that connects 3D artists with node operators who have idle CPUs required to produce or process the renders. The Render DOA had proposed to make RNDR a payment domination between artists and operators by implementing a burn and mint equilibrium process. This proposal, as per the proposal, the artist would burn the required amount of coins, RNDR, in exchange in non-fungible credits, which would be distributed to the node operators. So definitely they're setting up the situation where you can make money on the front end and you can make money on the back end. A big announcement with regard to Alameda. Those of you who are familiar with Alameda, Alameda just received an influx of cash. I think that's going to be very helpful to the company because investors are taking a keen liking They think they can overcome their financial situations right now as it goes. So it's a crypto slate. Bitfinex sends $8.5 million in cryptos to Alameda's wallet in the last 24 hours. Banifix made 4 transactions, which included a $6 million USD token and 1,545 Iridium, roughly 2.6 billion, to go towards the bankruptcy firm's wallet. Obviously, to give them liquid capital to continue to fight the case. Happy Thursday. The global crypto market is at 1.09 trillion with 24 hours volume at 70.8 billion. The price of Bitcoins right now, as we can see, is trending up significantly, coming from around 16. That's almost a 50% creep in the reversal for Bitcoin sale. And BTX market dominance is at 42%. The price of Ethereum is around, Ethereum is around 1,676.25. ETH market dominance is about 18.8%. So you're looking at almost 61, more or less 61% of the market is being dominated by Bitcoin and Ethereum. These are high price Bitcoins to be able to to jump in feet first. But definitely you could look at other Bitcoin related tech that you can move on or look to take part in. One of the big things with regard to the overall performance with regard to crypto assets, a big highlight was cannabis. Cannabis is showing 22% gain past year. With regard to all the Bitcoins and their performance, cannabis is really strong. So where I would look to invest in the market is to be able to find opportunities in the cannabis market, definitely for us to take part in. One of the things I would look to try to provide on a daily basis is to try and identify somewhere in the market, whether it's on the equity side, whether it's on the commodity side, or whether it's in the cryptocurrency side. I would try to find and highlight a potential company that you can invest in, or a sector in the market or industry that looks strong. As we scroll down to the top coins right now, we see Bitcoin at the top, up 3.61 from yesterday. That's the past 24 hours at 23,834 and 10 cents. BNB right now is doing good. All the charts are looking strong at 329.16. Cardano right now, I think it's looking good. You're looking at 0.4405. They're up 7% from yesterday. That potentially could be a play for someone who wants to. I mean, you're looking for value, right? So if you put, let's say, $1,000 in Cardano, you could just put $1,000 and sit on it. You don't have to worry about it. If it's not going to change your life, just let the money sit and play the long term, because we could see a real good bounce in the summer. The big news of the day, I would say today, the market has been the market has been rallying significantly. And with today's rally was actually led by Meta. Meta came out with some real strong news, and the market is doing extremely well. So as you can see right here, NASDAQ rallies as Meta's surge trigger a sea of green in tech. So the entire tech sector is doing extremely well. with the tech sector having a boost, and with crypto potentially poised to potentially make a 50% retracement from where we were at the low around 16,000. If we get back to, we break 24 next week, I think you can see a lot of investors start jumping in once it break that $24, $25 mark, $25,000 mark. Key for the overall market right now in terms of where you should be looking to put your money, diversifying, you should be looking at food in terms of companies who provide staples, whether it's in farming or whether it's in canned goods or whatnot. Overall, you definitely want to look at retail, because retail is a lagging indicator, but most of the time what people are buying can really tell you how they're spending and how inflation is affecting their pocketbooks. So consumer retail is going to be something that we should keep an eye on. Lastly, besides tech, and maybe next week I'll do some things on tech as well as financials. But definitely right now, what we should be looking at is energy and precious metals. And energy market is a big market. So there's a lot of big blue chip stocks that you can participate in. But unless you have deep pockets, they're priced, right? So you may want to look for something that's undervalued. Next week also, I'll probably present, I'll probably present one or two highlights that I see with regard to the overall market performance, what might be good, something to add to your portfolio, or at least add to your watch list before you decide to jump in and pull the trigger. So we're looking at potentially crypto breaking 24,000 BTC. Consumer goods. And precious metals. With regard to precious metals, if gold is too rich for your pocket, I mean, gold has been moving up significantly. Let me see if I can get a good quote. Where's my phone? Let's see. Okay, let me know if you guys can. Let me know if you guys can see the chart, the commodities closing prices so far for today. Okay, it might be a little difficult for you guys to see. Okay, I blew it up a little bit more. So the commodities chart, what we're seeing right now is WTI crude is at 75.95, right? So it's off 48 cents. That's really nothing. 1 second, let me make sure my camera is still in place. Okay, cool. Okay, let's see. I have Raj. Let me bring you up. Rashad G9. Okay, I apologize for mispronouncing your name yesterday. How you doing? And welcome to Sage Talking Business. Chris M. Welcome back, Chris. HR, why don't you do me a favor? Go ahead and wrenched up Chris. He really started off the show, the launching yesterday, maiden voyage. He came and dropped a nice Cash App. So he looked like he's going to be one of my day ones. So Chris is asking, do you think these markets rally are bull traps, as some investors believe the economy is in a recession and market is due for a crash? I think with regard to that, I wouldn't say it's a bull trap. The Fed did say that with regard to inflation, general inflation is tapering down, but the core inflation numbers, which are food and energy, meaning your light bill, gas for your car, or however you heat your home. Those things are still high. So they obviously want to allow the banks to keep their rates as low as possible for lending. So they didn't want to come in, I guess, with a heavy hand by dropping 50 basis points or 75 basis points, as has been the two previous. So they're looking for the economy to start to build up and improve itself better. Maybe we can cross 3% growth. And if that happens, that will look good for the United States. Now, with regard to the crash, there's several things that could potentially turn the markets upside down. Right now, it looks like the whole thing with the war in Russia is, I wouldn't say it's stabilizing, but there's continued predictability as the war is proceeding. However, that situation could turn left at any point. So if something really escalates with regards to the war, or if Putin decides to use gold to back the Russian ruble, because I'm not sure if you guys are aware, last year, Biden, right before the end of the year, either November or December, actually October or November, Biden had set the pricing for oil at $60 on the discount, right? So they're forcing Russia's hand to sell at a discount. The point is that if Russia decides to peg gold to their currency, that potentially can change the game, because you can see gold rally to 2,500. Some have speculated to even some have speculated to as much as 3,000. If gold goes to 3,000, you can see oil will skyrocket to north of $120. Oil north of $120 will shake the economic structure. So that is potentially where you can see situations turn negative. Also, what I would suggest is, with regard to the economy, right? Making money as an investor, we should not look at the market as necessarily positive or bearish and bullish. There's opportunities to make money on both sides of the market, and that's something in which I will try to highlight in many of the conversations and discussions in terms of my opinion and perspective on the market. If we see escalation in this war, if we see Russia does something major to peg their currencies to gold, or if they do it simultaneously through the BRICS with Brazil, Russia, India, China, and South Africa, if they were to create a basket of commodities using precious metals, including gold, including uranium, including rhodium, once other countries will have options to purchase oil in non-US dollars, that would mean the central bank of the countries who are buying oil, not through the United States or through OPEC, Aramco, then they would be able to go ahead and purchase oil through whatever that mix or basket of currencies would be, which means they would have to hold less and less American dollars, because obviously American dollars is what you use to settle international trade deals, right, as it pertains to purchasing oil. So this is where potentially a situation can shift and reverse itself, where we could look at a stronger recession that can actually affect the purse strings of the common everyday people, right? And that's the main thing there. A gold-backed ruble would definitely put a lot of pressure on the American dollar. If that happens, I think you'll probably see a faster rollout of the cryptocurrency, federal US dollar crypto. You'll probably see that come out quicker, right? If something like that was to happen, because they would then have to go back and rewrite what they did back in 1971 when they came off the gold standard. they be in the United States. So that is an issue. However, I'm not sure if you have ever played options yourself, Chris, or if you do have a platform that you use. If not, I have 2 platforms currently. Next week, I'm still speaking with the company. I wanted them to provide me a link. What I will do, I will provide one link for US-based clients, and those of you who are outside of the United States, I will also have a different link for those who are able to invest or who participate by watching the show. You guys will be able to open up accounts overseas as well. So that will be an opportunity, but I will probably share that on some type of a membership only or a Patreon with regard to the offshore access bank to trade for those who live outside of the United States. Did that help? Did that commentary help you a little bit, Chris? If you have a follow-up question, that would be fine. Okay, 1 second. Okay, let's see. Pretty much this is it that I wanted to bring out for today's show. Obviously, the investment in Alameda was a big deal by Betfinex. I think that is huge. I think there are investors who are showing confidence in Alameda and definitely want them to work out this governmental issue with the case that they have. I think Bitcoin could be a really good summer play for those of you who are looking to invest. Also, there's a new company that's offering, I believe, XRP Toolkit for digital currencies, whatever you want to store. I'm going to drop that. Let me see if I could drop that link today. Okay, this is. Now I do unstoppable.com. Let me see. www. Okay, beautiful. Okay, so where was I? Yeah, Chris, no followers as of yet. I guess I'm going to have to build it up. One of the things I really want to do with my purpose in developing this program is to really open brothers' eyes to the vast amount of opportunities that are out there for you to invest in and to give you a more direct, a clearer understanding of how things move in the market and how you're able to be able to make decisions that can actually benefit you. Because most of the time when the market is volatile, or most of the time when the market is uncertain, most people who are novice investors who were buying when the market was running and the market was up and positive, at that point, anybody could pick a stock and whatever you buy is going to go up, right? Because the entire market is moving up. But it's when the market is under pressure that most people don't really have the sophistication to know what to buy, when to buy, what's the target outlook, and when to get out, right? Whether you're up or you're down. Sometimes you need to cut your losses. Many people did tax selling at the end of December. And part of what we see in the January uptick of the market could potentially be investors that sold positions that were at a loss so they can offset the capital gains, maybe went back in and buy with a clean slate, owning the position or that stock at the current position where it is low, so they're not upside down, but they still believe in the company with regard to its management, with regard to the product or service that they provide, obviously. So a lot of people was going into the market, I believe. Those who took capital losses at the end of the year were probably picking up a lot of different things to be ready for this year, especially companies that they believe in. But unstoppable.com, when you buy your domain there, you own your domain. You don't have to make any future payments on it. You own it directly. It's all linked into digital currency. When you create it, you'll have to create a wallet if you don't already have one, or link your wallet to that account as you set it up. They're featuring right now XRP Toolkit. I forgot the promotion on it, but if you go over to the site, you'll be very impressed. And that way, you can probably also use your computer if you need to help do the back work to a blockchain to create the cryptocurrency. So I'm not sure if that's what they were talking about, but take a look at it and see if it's something interesting there where you can make some passive income when you're not using your computer. Rashad G9, are you still here? If you are, do you have a question for me on anything? Chris, do you have anything else you would like to follow up on, or a suggestion that you might want me to discuss come next week? Talking Business will be aired from Tuesday to Thursday. I'm going to do a 3-day live show. I'm still working out a lot of kinks, but as it goes forward, I'm probably going to roll out Friday, but I may do Friday as a weekend discussion and closing Thursday's market and what potentially you can look for over the weekend for those who may actually looking to take positions over the weekend in certain markets. I'm not going to be doing a lot of currency, FX market. That is not my strong suit. Commodities, I'm good in commodities, and I'm very versed in equities. I will also be looking to bring awareness to buying bonds. I think that's something that we, especially young brothers, if you're under 30, or even if you're in your 30s, buying bonds would be a part of the market that would be something that we could benefit from, or you as an investor or creditor can benefit from. And countries or states in the United States, when they're looking to raise money, they usually will have what's called municipal bond sales, right? That's one of the ways in which they raise money. But I would probably look more towards corporate bonds, because corporations are having much better year-over-year returns. If you buy the bond and it have a strip 6% or greater, depending on how much you accumulate, you can literally live off the interest on the strip of the bond that you have. And there's a separate market that trade the strips on the bond as well, because there's money there. So some people will actually trade the strip, and some people will hold on to it and use it as part of their income, depending on, if you have a couple of $1 million invested in the bond market, your return, depending on where your interest rate is locked in your strip, is going to be really good. Your coupon rate, I should say, right? Okay, no questions, just showing support for when I get the money to invest. Absolutely. Not only showing support, but educating yourself as well to the broader market, because a lot of people can talk about what they read in the paper and or what they pick up online. This is an industry where I know a lot of the players. I know the markets very well, and I can help give you some guidance. As I get the show up and running, part of my goal would be to bring in some either some analysts or some high-end investors who may be well known in the market we can have a conversation, and they can give you some real insights on what you should be looking at and maybe even some training. I know someone who currently now, I believe he has an option trading course, and I may speak to him over the weekend and see at some point where maybe I can link that course. So those of you who have the assets to be able to invest, but you may not want to be to buy a stock that's trading $100, $200, or $300 a share, you can buy the underlying options, and you can do short-term option trades, or you can do long-terms, which are leaps. You can hold them for a longer period of time. I believe leaps, you can hold on to those for 12 months prior to expiration. Okay. So if there's no other questions right now, I'm going to go ahead and close down. I'm going to try to keep the show normally between an hour to 90 minutes. I don't want this to be parallel to what I've already done on the Lapeef Network. I want this to be focused. I want it to be direct. I want it to add value and bring the information to you in a more digestible way to understand it, so you can make decisions in your day-to-day life with regard to how you invest. Any questions in the chat? We're good. Chris, I appreciate you supporting the channel. Rashad, G9, I appreciate you supporting the channel. Both of you guys coming in, being day ones. I look forward to the future shows that I will be bringing for you guys to be more informing as I go forward. Okay. Today's we're gonna shut it down right about now. We've been on for about an hour or so. Started around 3:30 or 3:15. So we've been on for about 45 minutes, I believe then. Okay, I'm gonna go ahead and end the show right here. Guys, have a good weekend. If there's anything that you think about or read about over the weekend, definitely you could drop me a message. You could either send it to my email, and that's Sage Talk Media. Sage Talk Media at Gmail. I'll put that right in the chat. Cheers, right. So if you have any questions or anything, just shoot me an email, and I'll look into it. And if it's something that would be worthy to just have a discussion about, a broader conversation, I'll make it part of whatever I'm going to talk about next Tuesday. If not, I'll probably just speak to you one-on-one and respond back to you in an email. Okay, Chris M says, I'm all in cash now. I don't trust the market. Well, what I would suggest, Chris, it's important to be liquid, but you also want to be able to take advantage of if the market flips as you believe it could be. The key things that will move, that have always outpaced all markets throughout history, is precious metals. You may want to look at gold, and you may want to look at silver. And gold, if you're looking to buy gold, you can buy gold basically right on the trading market. You could buy the equity to support the gold market, or you can look at specific companies that are in mining and what their reports are. Next week, I'm going to try to bring some information with regard to precious metals, and also emerging technologies that may be useful for us, for you guys to be able to take advantage of, because you definitely want to be able to identify if the market goes south, what is going to go up. Because remember, in the stock market business, everybody can be a winner. If you're losing, somebody is winning today. So if you understand that as a principle, then just because it's raining outside don't mean you don't go out. Matter of fact, that's when the savvy investor makes his best deal. So, but the key is obviously to avoid getting caught in a sector that's getting hammered, or better yet, to make sure you're either investing in the mineral itself, or the precious metal, or in the underlying stock that supports it, or the mining company, if it's a publicly traded mining company. And with that, if there's no other questions, I want to thank you guys for supporting the show. Rashad G9 and Chris M, much appreciated. Have a good afternoon, guys. This is Sage Talking Business. Look forward to seeing you next week.